All right, guys. So I'm just gonna go through a couple charts, basically just showing you guys how I go about the day and looking for trades, you know, to trade in the market. All right, so I'm on this sentiment report. All right, and so here's the cheat code over here: trading opportunities. I don't have to do anything. I just have to look over here and let's look at the USD Swiss franc. I go up here. I see already. I got my long and my shorts. I'm gonna copy. So I'm gonna go over here on the chart, paste it, so it show up. I'm on a daily chart, so this is all I really need for right now, a daily chart. And I know on this candle, I already have a long 80%, short 20%. Now watch this. Earlier in the day, had you would have did this early in the day, you'll be able to find your entry right and looking for shorting opportunities. All right, so now I'm on a daily chart. We go down. I like between the 30-minute and 15-minute chart. Sometimes if I'm scalping, I look for to 5 minute, but between the 30 and 15 minute, it's pretty cool, right? All right, so let's do this. So with Forex, you got your different sessions or whatnot. So if I'm looking at the New York session or whatnot, we're right here, right? It's 8:30. All right, so we can move this over right here. It looks a little different now since we're on the lower time frame, right? All right, so 80% long, okay, 20% short. So my whole entire bias is that I'm looking for shorting, right? I want to go short because I know majority are going long. So that's just my overall bias when it comes to this. And essentially, I just want to look for sales setups, okay, based off of that. And as I mentioned before, you can use the engulfing bar technique, meaning you want to see either the same color engulfed or the opposite color engulfed. And right here we had an engulfing bar. All right, just see this bar right here. It engulfed this one. Now there's two ways you can do it. You can put your stop loss, well, three ways. You can put your stop loss above the counter that was eliminated, or you can put it above where the last structural area is, which will be here. And the third one is that you're looking at a bigger structural area, which will be up here where your stop loss would go. Now, if you're going this far up, you're probably swing trading at that point. You definitely need to make sure that your risk reward ratio makes sense and that you really are trying to take this way down here to the downside and it makes sense, right? So let's say I enter right here to get into the trade. All right, and now I can just I can measure. All right, I know right here would be 13 pips. I know up here with 30, 34, 35, which is pretty good, right? Now, if I'm doing a standard lot size, that's $350. I'm saying that I'm willing to lose, or however, if my downside targets here, I really believe they can get here. All right, so it's about what 78. So it's almost a 1 to 2 risk reward ratio. That's pretty decent. All right, but if it was a 1 to 1, you may want to think different about that. All right, so that's what I would be looking for on that. Now, because I know that we're in a 70, 80 long, I know we got a lot of uh, orders that's going to come in. I really want to see this level violated, to be honest. I think that this is a key level down here that price can get to. So I probably would be looking to continue on and shorting this thing. All right. And we already got close to the 61% retracement level. But if we break this level, I know I got the 70 and the 78% to play with. And I know for right now where we currently are, it's getting late in the day though, so it's almost 4 o'clock. But yeah, we got about 60, 65, 66 pips that we could play with. to get down to the downside based off of this. So yeah, I definitely want to continue to see the longs overextended. So this is pretty good. So I still would be looking for the bias to go to the downside. Basically, I'm not looking for nothing long. I want to look for shorts. I want to look for opportunities to get short. In fact, if the price pulls back up in here, I'm looking to get short. Why? It's the same concept over here where you have we have your what your all right. So let's say we're moving up, right? If your bias over here was the opposite, meaning that majority was short and instead of long, you gotta what? You get if you're looking for longs, that means you're looking for pullbacks to get long. So these are your higher highs, higher low, higher high, higher low, higher high, higher low. You on these higher lows is where you're looking to get in. What most people do is they look to short on these. They're thinking, oh, it's gonna go short, it's gonna go short. No. What is the overall trend? If the overall trend or the bias is that we're long, you want to look to enter on pullbacks. Instead, the opposite has happened to people where they're looking to short on a pullback. And just like up here, if if you think that price is supposed to be going down, you definitely want to be looking for what? Pullbacks so that you can continue going short. But this is what happens to people. They get in, all right, it starts to pull back, and then they want to what? Continue going long, not knowing that you need to understand what's the downtrend right now. Low, lower, high. This is, matter of fact, this is a perfect one up here. All right, let's look at this one over here at the top that I just looked at. So you can be able to see what I'm talking about, right? So let's do this. Let's actually go with it. So we get a low, all right? And then we start to push up. All right, this is a lower high. But if you've already established that maybe we're overextended, maybe it's time for a trend, it's going to be difficult for you to determine whether it's a true trend reversal right away until some structure has formed. So you may not be able to catch it right now. But for whatever reason, let's say you do have enough evidence that, hey, we're overextended. This push here, you have all the amateurs coming in the game. They're thinking that price is going to push higher, so they're doing all the buy-in. But this is just a higher low or a lower high, right? All right. So boom, look what happens. Lower low, same concept. Oh, we're going higher. No, it's just a lower high, lower low. All right, right here became a lower high, which would have been ideal area to start looking to get in at. But more importantly, it doesn't matter. We can find some footing somewhere in here. I still looking to take this thing short, and I want to see a what? A lower low. I want to break this and get to a lower low. This setup to me is more advantageous. Okay, we have our body of work of what we want. Okay, so within this, I can play different strategies, right? I can look for, sometimes you can look for double tops, double bottoms. This one potentially would have been, I'm not 100% if it shows up on that stuff. If I put my double tops or double bottoms on, sometimes they will show up, but I leave it on just in case. All right. Um, you have your supply zones. Okay. See how we come back. All right. Now this makes more sense now. Why? It's because we know that the longs, there's too many. So and then coming back into this zone, it just gives us more confluence of, okay, hey, maybe I should be looking now to really go short. So for instance, people come in and I've done this plenty of times. In fact, I've made this mistake, I think last week. All right, it takes something like this, right? If you believe that if this is going to go short, what happens is you get people start shorting here. It's probably the worst thing you can do. You don't want to short here, okay? Because all this is just a pullback off an impulsive move pullback. So even within this, you got a high, a higher low, a higher high, and it's still a higher low, and eventually we get a higher high here. Okay, so we're still within this particular range, right? But it makes no sense to short here at support levels. Shorting, even right now, somebody's going in and want to short. It makes no sense. So if you start training your mind, it's like, hey, I want to start shorting at the highest point possible, especially on pullback. So you want to look for some pullbacks in the market before you even look to go short. But you definitely want to stop shorting at the support area. Okay, you want to get your mind. It's like, if I'm going to short, I want to short at the highest, or even over here, right? Look, price gets down here. Pretty sure there's a lot of shorts that came in, but look what happened. Price just pulled against them, and that's a lot of pips that could knock them out of the trade. Okay, even right here, somebody's shorting right there. Why would you enter right here? And look what happened. You get ping ponged around. Yeah, eventually it goes into your direction, but there's a lot of heartache and pain. You don't need to deal with that. Okay, but here's someone up here. At least if you want to be shorting, like, hey, I'm looking at these areas, right here, and we go. But you want to establish what is the overall trend. What am I looking at? Okay, and that's going to determine how you play these levels. All right, so let's go back. All right, let's look at some more. So look at the euro, British pound. All right, I'm gonna take off these double tops, bottoms. All right, what was it over here? Sentiment, British pound, euro. All right, we got 74% that are long, and we got 26% that are short. All right, we definitely want to go ahead and add this onto the chart. All right, so we got here on the chart, and we're gonna keep this here. And typically, when you start doing this, you're gonna have a lot of these notes on the chart along the way, so you can just track, so you can understand where you at. All right, and this 74 to 26 could have went all the way back here until last week. So once again, we know that we're looking to go short. So our bias is short. So what are we doing? We're looking for to enter on these higher highs or these higher lows. You got a low here, and you got a higher low. All right, now we're in a lower low. Get a little bit of a higher low, but just keep moving forward. Right now, here's a little trick that you can do. Okay, if you're going to short at a support level, all right, at least do it that's breaking a support level. You're still going to be a lot of heartache and pain potentially, but it's a lot better if you got used to, hey, once support breaks, I prefer you wait for a candle to close below that level. It's a lot different, but you're going to have, you know, price have ranges, guys. You got to understand range. You got to give it room to grow. You got room to breathe. All right, so look at all this choppiness. Yeah, they get back up in here, and then we finally break. All right, so here's one of my solutions that I do with this. I don't go heavy on these breaks. Okay, I may put in a small order on these pullbacks, then I scale in and I add, and I'm ready to go. And then eventually it plays out the way we want it to play out. Okay, so that's one way you can do that. Of course, we're on a lower time frame, so it's going to look a little different. If you enter based off a higher time frame, someone's going to look a little cleaner, especially think of a 4 hour chart. All right. And so on a 4 hour chart, where were we at? Oh, right here. You see, less candles, right? So it looks a lot cleaner. Okay. We still haven't had a full candle close below on here. We just keep getting these wicks back above. So if you're very patient, you make it wait for. So look, we get this break. You're not entering anything, all right? Because what? There's no full counter that closed below, and then you get a wick back up. You're still not in the trade, all right? And then you get discounted, you wick back above. You're still not in the trade, and then all of a sudden, this whole entire thing closes below here. Maybe now you start looking for your what entries to go short. It's a lot of patience with that. I, for one, don't have that type of patience to wait for that. But if you're very conservative, and you're waiting for things, then boom, you can do that. Okay. Preferably for me, I would try to break this down, go on a lower time frame, and see what the field levels are being respected, and look for entry like that. All right. So we got this 74% along. We're still looking to take this thing on down to the downside. And we're trying to find structure over here at this level over here so we can see where price is and where price can and relation can come on down. And price has already come into this particular area a little bit. So, yeah, we'll be looking for price to come deeper into this area. Now, overall, I don't like the choppiness on this particular asset, so it really doesn't give me a lot of confidence. So, normally I probably wouldn't even trade that one. All right, look at the odd New Zealand. All right, we got big, huge imbalance here. All right, let's go ahead and put ours on the chart. That's wrong. All right, so we got this on the chart. Yeah. All right, so 81% is short. We keep pushing up, making higher highs, higher lows. Same thing. Like I said, because I hadn't been trading this particular pair, I would have had multiple notations on the chart on where we currently are. But you clearly can see, at least from down this point, we have moved over 379 something pips. The high 388. That's a lot. We clearly see over here that it was 81% short. So all these shorts get ate up. And then we move to the upside. So how would we play this? We definitely want to look for what? We want to look for these minor little pullbacks because this is what traps people. The shorts come back in and thinking that, hey, it's going to go short now. And now that's what they want you to believe. It's just a higher high, higher low, and boom, it pushes up. So same thing here. I'm still looking for buying opportunities until the sentiment drastically changes and gives me something else. Till then, you're still looking for buying. So you see how you're training your mind to still look for buys until the market gives you something totally different. Okay. All right. Look where we at. We got this huge little range that we're going upside line. This has been for all over a whole year. All right. Um, I could do different things. Right. Do my fibs. All right. We just broke above the 61%. Okay. I probably want to get down to the 78. So price possibly could start to fight to get back up here. So something to keep in mind, right? So you gotta ask yourself, how do you know when a trend is over? So you have to notate on the chart these imbalances. So you can start seeing it in real time. Whenever we start seeing the shorts decrease, and the longs increase, we're getting ready for some type of shift. All right, do one more to stop. To Europe. Euro CAD. All right. Same thing, basically. 81% short, 19% long. Y'all clearly see we're in uptrend. I had already somewhat had this plotted out at one point, but y'all see, right? So what are we doing? We're looking for buying, and this was tough. Why? Because look, man, look at this. Look at this right over here. Whatever price got into this area, it dropped. Okay, but we don't know what the sentiment was at the time over there. All right, we get a little over here. We break above, but then we eventually drop. So what happens? You will get all these traders that are looking at the same thing. All right, we're in an area where traditionally it has what dropped. So you have to be careful, but you still have to train your mind that hey, the established trend here. We still should be looking for buy opportunities on those buybacks, even if you're looking over here and you're like, but look at this, man, it's dropped. Look at over here, it dropped. But we also don't know what was the ratio at the time. We don't know. Okay. So that's why we got to notate on a chart. So then you go back, you start being able to say, okay, back over here, there were 80% long and 20% short. Now, guess what? If this was true over here, then what are you doing? You're looking for what? Trying to go short, and you would have got that because you saw this imbalance. But if you don't know what it was, looking back in hindsight is going to be useless because it could tell you something. All right. So up here, it could be extreme longs, and that's why we pulled back. Okay. But right up here, it could be extreme shorts because now everybody thinks it's gonna go short. That's why we're looking to what? Go long. So we gotta understand. We gotta notate on those charts, guys. You gotta notate so you can know what you're dealing with. Because if you just take all this off and just look at this, you're automatically taught on most online, trading groups or whatever. Man, it's back in supply. You're supposed to what? Look for shorty. This is what you're supposed to be doing. Well, that's not entirely true. I need to know the direction of where most traders are putting their orders. We can't go off of just chart patterns anymore. We gotta know that data. We gotta see. We gotta see hidden things on the market that other people don't see. The game has changed. It's no longer just easy like that. We need to see that when something like this was happening, what was that? What was exactly happening? All right, were there a lot of people who were going long right here? And then they got wiped out. And then when it got down to here, was there a lot of people starting to go short, and then they got wiped out? Those are things we need to see. But you got to notate that account. All right. We'll end with some options. Let's go look at the Google, and I've been notating throughout the day. And these options do change on this options channel. It changed in real time, well, not real time, but it updates at least every 15 minutes or so. Um, So so you'll see You see, I got all these notes on here, right? So this is from earlier today. We go to the lower time frame, 30, so y'all can see some stuff that was happening. Right? So you see right here today, at one point we had 35,537 called, which means those are people who think it's going to go up, and then we had 13,440 people think it was going to go down. What do you think happened? We went down. Same thing up here. We had more calls versus puts, still on the 16th. What happened? We still went down. So y'all see how it keeps updating. This is all still in the same day. And then now, towards the end of the day, this is where it came out to. So possibly going into tomorrow, still could see some more downside. Why? We got 73,000 orders of call orders in volume, but we only got 26,355 puts. Now, here's something that we can start analyzing. What do you notice? It's the highest put level that we've seen from today. It's the highest put that we were seeing even since yesterday. So the highest was this was 22. Now we're at 26. We had 13 right here. We had 1,000 change right here. So this put is increasing. And since it's increasing, there could be some form of at least a temporary rally, so to speak, right? It's a lot of so guess what? When we start seeing that one order pattern is gaining, it could be a reversal. All right. Now, it's nothing to say we can still continue to roll down here, especially to these levels down here. That's a possibility. Hey, who knows? However, notate that chart so you can then be able to what? You can paint the picture. You can get an understanding of what is happening with that asset. This is the data that you need. Okay. All right. So I in there. Hit the like button, subscribe, support E White. I am out.